I was doing a mentoring session today, one-on-one with a client, and I was taking them through some of the trades. And kind of upon revisiting this, I realized that I had taken actually a really bad trade setup. It wasn't just weak. I just think it was a really not a great idea. And I wanted to kind of walk you through this because the net result, all of the trades that I took last week have carried over. If you look here, they're all amber. As you just go through them, they're all amber. Every single one is closed out. I had a single loss. I had break even and 1-to-1s out of most of the remainder, and the net profit in this case was 6.12. So the profit from all the currency trades last week was 6.12%. And so it would appear on the surface that I had done, obviously must be doing something right, because I kind of made profit on it, and actually it was more than I had expected at the last time I updated it, because some of the trades had kind of gone a bit sideways anyway. But the purpose of this video is to highlight that, first of all, when I went through it, and this is another benefit of a trading journal, is when I look back at this trade, it was actually the last one on my list. This was for CAD Yen. Just go through this, have a look at it a lot closer up. It's really not a great trade. Okay, so if I kind of look here, this is the logic behind it. There is a downtrend. It's not great. Price will pull back into the moving averages. It's a bullish candle at this point. It didn't trigger the first day, so the next day I took another setup. And actually the logic was that if the market decided to ignore the bullishness and went the other way, then there would be sufficient bearish momentum to make it a profitable trade. But that just isn't really enough. Okay, so the second trade setup actually here was also a bullish candle, to a degree, a small bullish candle, and price actually did produce a swing high, but this was still not a great setup. Here's why. Okay, so first of all, the weekly is technically in an uptrend. Price had come back down to the recent lows, which is not really a sign of bullishness, but the fact of the matter is this is still technically an uptrend, and this is still a bullish candle. All right, so I basically traded against the higher time frame. That's fine, all right? I mean, occasionally that will happen. But the monthly, if I go back and have a look at the monthly over here, there also isn't really a good trend. And this is where it isn't just a bad idea. I mean, it's just really not a great trade. There's a strong level of support here. There's no clear trend at the moment. Okay, we've got some low highs coming in, then we've got high lows here. So there's no clear trend, which makes it even more of a reason why price can do something unpredictable. And so the outcome in this case was that price subsequently triggered me and hit the 1-to-1, so it then became a break-even trade. Updated my stop loss to the candle the next day, and I got stopped out the day after that. Okay, so the net result and now of course you can see the daily has gone into an uptrend, and then the net was 0.25%. So 0.5% minus 0.5%, or half of that, I beg your pardon, because price retraced and hit my stop loss. But this is to demonstrate that, first of all, this actually really wasn't a great trade, and I'm trying to think why I thought it was. And actually, I think, in the moment, I was probably looking at a whole lot of yen charts and decided that the overall Japanese yen momentum was in a particular direction. And so I kind of got caught up in seeing lots of potential setups. So it's not a great trade setup. It happened to break even. I didn't lose money on it. And it's a great example of when you can take a bad trade for not really the right reasons and still manage to get away scot-free. So you have to be careful that you're now not encouraging yourself to do it again. That was really just not a great trade. And I thought I would talk you through this to explain how, first of all, it is possible to take a setup that just isn't wow. And also how I might have walked away from it maybe looking like it was a fantastic idea because I didn't lose money on it, but it really wasn't. And so the purpose of this trading journal is to be able to revisit these things and then understand why. So I went through all the other trades to make sure that there had indeed been rational, logical reasons for taking those trades, and they were. But this one in particular I think was worthwhile talking through here.